And if that is the case, you can reach out to anyone in the Icon team, preferably your solutions specialist, to get more information on those things. And as always, if there's questions, please let's make it interactive. I know for me, talking to a screen isn't very stimulating. So put up your hand or even unmute yourself and just interrupt me. I think the more questions that are asked, the more everyone else will learn as well. Okay, so just an introduction to Sanlam. I think you all have heard of them. You all know Sanlam. They've been around for a long, long time. But in the Icon stable, Sanlam are considered to be our anchor tenant. So I always use the analogy, it's kind of like going to Macro. You can go there, you can stock up on your wine for the month, you can buy a washing machine. And I mean, I haven't been to a Macro in some time, but I believe you can also buy like fresh produce there now. They've got like a butchery section, and not that I would probably buy my meat from Macro, but yeah, it's kind of a one-stop shop. They're the largest insurer in Africa. Glacier, their asset management arm, is now the largest asset manager by AUM in South Africa. So cover every kind of market segment, product type, demographic, ranging from low LSM right the way up to professionals. We don't really play very extensively in the lower LSMs as a business, but Sanlam are particularly strong with the professional market. They've developed quite a compelling differentiated offering for professionals. And in the Sanlam world, a professional is anyone with an undergraduate degree or higher. So unlike PPS, where you need a 4-year degree or higher, it's a bit more inclusive. The products are very, very similar to PPS, in some cases, actual carbon copies of the product. And they also offer preferential pricing to professionals. So it's a really good solution if you're playing in that space. They've obviously got the obligatory bonuses and boosters and things like that. If you know that's part of your view or your philosophy, where they do give value back to loyal, long-standing policyholders. And I'll get more into that a bit later on in the presentation. Okay, so that's just where Icon fits in to the general market. And within the Icon stable, obviously we work with a whole host of product providers. And we've realized, as I'm sure you have, that every company has its strengths and its weaknesses. In terms of the agenda for today, we're going to be covering 10 reasons why Sanlam is considered, in our view, a very good insurer, ranging from some of the philosophical things to some golden nuggets or unique selling points with the products. And then obviously trust is also a really big factor with clients. So we'll be talking through things like ombud stats and some of the rewards and recognition that Sanlam have won over the last few years. So starting off, reason number one, why we believe Sanlam is a top quality insurance company is their underwriting philosophy. So Sanlam, I believe, pioneered this approach, and some of the market have followed suit. But Sanlam's view is that they will underwrite you once and once only, and that is at the inception of the policy. Okay, so there's no need to inform Sanlam of any changes in your risk profile. So you can change occupation, you can start smoking, you can take up hazardous hobbies, you can move overseas, and none of this will affect the coverage that you have. This may seem trivial, okay, but I think it's particularly powerful when it comes to income protection. And we've seen it on a number of occasions where clients will take up cover. They've got an office job, they do administration, you know, even in some cases as professionals, and they go through something in their midlife and they decide that this isn't for them anymore. As I'm sure we've all kind of done at some stages in our life, to question what we're doing and having a bit of an existential crisis. And some people change tack completely and start to do things that are a lot higher risk from an insurance perspective. If that's the case, with Sanlam, it doesn't matter. You can have income protection on a 7-day waiting period. You can go from being a lawyer or an accountant or an administrator and go and fly helicopters or become a professional sports person. You can become a rugby player. If you have a 7-day waiting period on your income protection, it does not matter. I mean, in the extreme case that you became a Springbok rugby player, you would be covered for your income with a 7-day waiting period regardless. And that's very powerful, not just for clients, but I think for advisors as well. If you don't do a review, or if your client doesn't tell you that they've changed something in their life, there's no risk to you as an advisor because you can be rest assured that they'll be fully covered regardless. Okay, so Sanlam are taking on quite a lot more risk because of this philosophy, but it's important because it does give extra security and peace of mind to our clients. Reason number 2. So Sanlam has a number of different product options. And while this may look like it introduces complexity, it does also give advisors and clients choice. Okay, so there's 3 different product options with Sanlam, starting from the left, Classic. So Classic is the more affordable product option with Sanlam with your everyday vanilla insurance benefits. Okay, these are comparable with the rest of the market. So it's not just a core offering, you still get all the comprehensive benefits of Premier, but it's slightly limited in terms of product flexibility, guarantee options on premiums, premium patterns, and there's no wealth bonus built into this product. And I think that's really important because obviously these bonuses carry cost and not everyone sees value in them. So if you're someone who wants to keep your insurance simple and affordable without the bells and whistles, Classic is your way to go. Then there's Premier. So Premier has all of the product optionality, all of the products in the Sanlam stable can be used via the Premier platform. And here you've got the lifestyle benefits of the wealth bonus. It's slightly more expensive. So if you're quoting R1 million on Classic for life cover and R1 million life cover on Premier, Premier will be about 5 to 10% more expensive than Classic. Okay, so you're not going to get a more comprehensive benefit necessarily, but you will get the wealth bonus. You will have access to extended guarantee terms. So Sanlam has a whole of life premium guarantee option, and you wouldn't get access to those on Classic. And then lastly, we've got Premier Smart. So the way that we're doing business is changing. Okay, we can't just accept that a paper-based application is the only way for us to do business. So Sanlam have introduced this as a streamlined, technology-driven application and underwriting process. And they're leveraging all of the latest tools like facial recognition and health scanning and screening, advanced data analytics, okay, to minimize underwriting requirements. And because the journey is more streamlined with fewer touch points from humans, it also enables Sanlam to offer a premium discount. Okay, so this puts the power in your hands, allows you to control the process from start to finish, minimizes the turnaround time from an underwriting standpoint, and also makes your clients' premiums 5% cheaper. Okay, I think everyone's heading in this way or in this direction. And even though Sanlam, I mean, everyone considers to be them a big, old, lumbering behemoth, they're still able to pivot and implement these types of tools, which I think is pretty impressive. Reason number 3. So everyone says life cover is life cover, and I must agree partially to that statement, but we have so many other tools and products available to us in the life cover space. It doesn't just need to be lump sum whole of life cover. Okay, very often this is actually inefficient from a planning perspective. What if you need a death income? What if you need a term benefit? What if it's debt cover and it's being, your spouse and you have signed joint surety for a bond? All of these require slightly nuanced life cover benefits. So Sanlam have a full suite. Okay, so ranging from your traditional whole of life life cover, that's also available on a term basis. Apologies for the typo under death income. So there's death income benefits as well. This is a tool or a product that Icon utilize a lot. It overcomes a number of planning and behavioral risks. Okay, so not all of our dependents or beneficiaries are good at handling finances. And in cases such as that, a death income benefit might be more suitable. Okay, provides certainty and peace of mind that there's going to be an annuity income being paid rather than a big lump sum of cash that can be misused and misappropriated. It also is a lot cheaper than the equivalent lump sum cover. Okay, so it's a very, very powerful planning tool, we believe. Sanlam has immediate expenses. This is a estate liquidity benefit. It's almost like a funeral cover benefit. It acts in that way, where it will be paid out to the beneficiary within 48 hours of providing a death certificate. Okay, even if it's an unnatural death, and that gives a bit of a cash flow injection to pay for any short-term expenses. Estate expense is specifically been designed for estate duty, as well as all of the kind of small costs associated with death that we often overlook. So if you and your wife or you and your spouse own a property together, if one of you pass away, that property needs to be transferred into the surviving spouse's name. There's conveyancing fees, there's bond registration fees, there's transfer costs associated with all of those things. There's master's fees, there's advertising expenses. Okay, so all of these things can add up, and if they haven't been properly catered for, either the estate is going to have to sell some assets or it's going to come out of the inheritance of the beneficiaries. So what this product does is it's specifically designed for the estate, and it will only pay to the estate to provide liquidity for these costs. We've got funeral cover. Okay, so Sanlam does offer non-underwritten funeral cover for the life assured, the life assured's immediate family, and the life assured's extended family. Okay, so this is available. You don't need to go to an AvBob or a Sanlam Sky, which is their kind of their mass market product provider. You can do this directly through Sanlam Life. First Death. So First Death is a very clever product. I'm sure we've all heard of Last Death life cover, and that's there to cater for, again, estate duty. But First Death is specifically for liabilities. Okay, so like I said earlier, if you and your spouse or you and your business partner have signed joint surety for a loan or a bond, you only really need one amount of life cover. It's inefficient for each of those people to take out cover for the full bond value. With this benefit, you can share one amount of life cover, and that cover will pay out on the first dying, making the solution more affordable than the than the option of taking out your own individual policies. And then lastly, accidental death. Accidental death benefits are specifically for people who are uninsurable. I think we've all seen how difficult underwriting has become, especially since COVID, and also people's health has deteriorated. We are struggling a lot with getting people cover, and sometimes accidental cover is the only option we have available to us. So rather than turning a client away and saying, sorry, I can't help you, you've been declined, Sanlam has a full suite of accidental benefits, not just life cover, but disability and income protection as well. And what we always say is position it as an interim solution. Okay, we're going to cover you for accidental causes just for the time being. And in the meantime, they can improve their health and reapply in the future. Hopefully, we can get them comprehensive benefits later on.
Jono, sorry, while you're there, we have a question in the chat.
Cool.
Somebody was asking a question on your first death.
Yeah, okay. Do you want to read it to me, Van?
They were asking for the first death, does the spouse need to be underwritten?
Yes, both lives would need to be underwritten for first death. Okay. Keep the questions coming, guys. Just to unpack the death benefits in a bit more detail. So I'm going to specifically focus on the death cover on, this little Lego block. Can I actually can't get a pointer. Can you see my cursor?
We can.
Okay, cool. Okay, so every single applicant who applies with Sanlam for life cover will get free cover as soon as that application is submitted. So while it's being processed and underwritten, they will receive accidental life cover of R500,000. Okay, if something unexpected or unfortunate happens to them, they'll be covered for an accident, for death caused by an accidental cause. As soon as that policy has been medically accepted and underwritten, the client will receive 30 days of full free cover. Okay, retrospective from the date of commencement. So if we are the 2nd of July now, we activate a policy for the 1st of August, the client will be on cover free of charge for the month of July. Obviously from August, they'll begin paying premiums for that coverage. And then as most companies do, a terminal illness benefit is included as well. Okay, so if according to the Sanlam CMO, Chief Medical Officer, the client has suffered from a terminal illness with a life expectancy of less than 12 months, they can opt to accelerate 100% of their life cover and have that paid out to them in full. Sean?
Yeah, Jonathan, I just want to clarify something there on that 3 cover.
Yeah.
I've written a client and we start on the 1st of August, but his first premium is only going off on, let's say, the 15th or the 20th of August.
Yeah.
Is he still covered then technically from the 1st until his pay date in August?
So if it's the 15th or the 20th, Sean, you'll be debited in advance. So the way that would work is they would receive full cover for the month of July for free, but on the 15th or the 20th of July, they'll be debited for August's premium. Okay, and then on the 15th or 20th of August, they'll be debited for September's premium. And that will continue. Obviously, when they cancel that policy or pass away or claim, and that policy ceases, for that final month of cover, they won't pay a premium because that would have been paid the month before. So it just goes, you're paying a few weeks in advance in that case. But yes, the free cover would still be applicable. That makes sense.
Yeah, thanks. No, that makes sense. So technically, if a premium is 15th and later per month, you have to warn your client that he is going to pay in advance. Okay.
Correct.
Thanks a lot.
Yeah. In terms of the death income offering, so this is something that I mentioned earlier. Sanlam has two death income options. Okay, so there's a fixed cease age of either 65 or 90. And this is a very, very great tool because it's essentially a form of decreasing term cover. I'll give you an example of how this works. So let's say I'm 50 years old and I buy death income with a cease age of 65. If I were to pass away at the age of 50, my beneficiaries would receive 15 years worth of income up until what would have been my 65th birthday. If I died at the age of 55, they would only receive 10 years of income. Okay, so it's a great planning tool because I mean, in an ideal world, come the age of 65, I should have assets that I can retire on. If I passed away on the day that I was to retire, my beneficiaries and dependents could then live off of my pension. There's no real need for insurance at that point in time. Okay, there's a cease age of 90 as well, so quite a big gap. I wish there were a few options in between. Unfortunately, that's not the case. But this benefit from a pricing perspective is incredibly competitive. And we believe in using a combination of income and lump sum. So for all of your income-based needs on death, provide a death income benefit. For all of your capital needs, like estate duty and debt, use a lump sum life cover benefit. Yes, Sean.
Okay, I think you just answered my question there. So
Okay.
if I write a death cover for my client, I do have the option to say instead of a lump sum, it can be paid out on a monthly basis until retirement age 55 or 65 or whatever we decide he needs.
So with the Sanlam benefits, you don't have the option. So you have two separate benefits. One will pay out as a lump sum, one will pay out as an income. So if you have death income on your policy, it will only pay out as an income. If you have lump sum life cover, it will only pay out as a lump sum. There's no optionality at claim stage with Sanlam on death.
Okay, so I need to decide beforehand which one of the two I want, but there are that option to take a death income instead of a lump sum.
Correct, but that will have to be quoted for upfront.
Okay, no,
Okay.
I get that point. Thanks.
Cool. The second option, which doesn't have as much of a pricing benefit, is a whole of life fixed term death income. Okay, so this would be applicable if maybe you wanted to provide an income for a fixed period of time. You didn't want it to have that decreasing nature, but the reason for that choice was because you couldn't trust the person who's receiving it to manage the lump sum very well. Okay, so think maintenance orders. Think irresponsible teenagers. If you wanted to leave them with an income for 5 years or 10 years, you could do so, and it would pay that fixed monthly income, but it would not be any cheaper than the equivalent lump sum benefit. So we typically would use this mostly for shorter payment periods, 1 to 5 years, where you're looking to provide liquidity into the estate, or just trying to provide a bit of a buffer to your beneficiaries in the form of cash flow. Okay. Some people also believe, sequencing risk is a concern with lump sums. So you reinvest the lump sum on death, and the markets tank, right? Like if 20% gets wiped out of the stock market, you're now drawing an annuity from that lump sum. That's going to erode your capital much, much quicker than it would have if the market was healthy. But if you have a death income benefit for 2 years, it kind of mitigates that risk. You can leave your lump sum in the market and you can wait for the market to recover. No need to draw down on it because you'll be receiving the death income benefit over that time.
Jono, sorry, just another question.
Yeah.
Can the client take two policies, one lump sum and one death income?
Absolutely. Yes.
And then there's a comment posted in the gallery as well saying that obviously a testamentary trust does not have to be created for the death income benefit.
Only if it's being, so a testamentary trust doesn't, if it's being left to a minor younger than 18, Sanlam Legacy will administer those funds to the beneficiary if there is no trust set up. Okay, cool. Okay, reason number 4, lump sum disability benefits. So at Icon, we don't really like lump sum disability very much. We understand that sometimes it is necessary for certain needs, but income protection is so much better than lump sum disability. If we just look at claim stats, lump sum disability very, very, very rarely pays out. Between everyone on this call, there may be, a number of like disability claims that you could count on one hand, maybe two hands. But it's just one of those products that very seldom benefits policyholders. Having said that, Sanlam have an incredible range of lump sum disability benefits with some very well thought through product enhancements built into it. And they've got a range of 4 products. So comprehensive disability and comprehensive disability plus. I won't go through all the different layers in too much detail, but you can essentially see everything covers occupational disability except the impairment benefit. They all cover severe impairments at 100%. Okay, so to qualify for a 100% impairment, you need to be in quite a bad way. I don't know the exact definition off the top of my head, but it would probably be something like a paraplegic in order to qualify for a 100% impairment claim. And then we've got less severe impairments. Okay, so Sanlam pays impairments from a 5% severity. So that is very, very good. I think you'd probably struggle to find many insurance companies that pay impairment from 5%. A lot of companies pay from 25%. Some even only pay from 50% severity upwards on their comprehensive disability. Okay, so what does that mean? It means that in order to qualify for a lump sum payout with Sanlam, if you were to have product option 2 or 3 or 4, you would have to lose 2 fingers on your non-dominant hand, and you would get a 5% impairment payout. Okay, so the threshold to claim is really low. Essentially what that means, it increases your chance of claiming. There's various retirement ages from, I think it's as low as 60 all the way up to whole of life. And then there's catch-all definitions built into the impairment benefit. That's measured on whole person impairment. Okay, and all of the disability for occupation, or all of the occupational disability is on an own occupational basis. Okay, no own or similar. I want to focus in more detail on the Elite Disability, which is Sanlam's flagship product. And you'll see in terms of the boosters and the add-ons, it ticks all the boxes. Okay, comprehensive disability, this is what we would typically use for personal cover, ticks about half of them. And then comprehensive disability without the plus, this is what we would typically use for business assurance, only ticks 2 of the boxes. But I'm just going to unpack these in a bit more detail. So extended occupational cover. This is sabbatical cover. So let's say your client, I love using midlife crisis as an example. Let's say they go through a midlife crisis and they take a sabbatical and they want to go and find themselves. Maybe they want to go back to school. They want to go traveling. Maybe they've had a child and they want to take time off work to be a parent. They can do so with all of Sanlam's disability benefits, income as well, and Sanlam will cover them occupationally for up to 12 months. Okay, because there's still a very real risk that during that time, they may become disabled. They could be involved in an accident, they might get sick, they might never be able to return back to work, even though that was their intention. And with many other companies, if you aren't working, technically, you cannot be covered from an occupational disability perspective. Okay, with Sanlam, you will be for 12 months. Optionality number 2, so there's built-in future cover for young lives. So if you're below the age of 35, you may not need life cover. Okay, you don't have dependents, you don't have debt. You do need disability cover. So what Sanlam says is if you purchase disability cover below the age of 35, you will, without any medical underwriting, be able to take out the same amount of life cover up until your 35th birthday. Okay, so it's guaranteed insurability for younger clients. Points 3 and 4, these are very cool, and I think undersold by Sanlam. So when I kind of prefaced lump sum disability, I mentioned the fact that it very seldom benefits clients. And that is because lump sum disability is dependent on permanence. Okay, so your disability or impairment needs to be considered permanent and irreversible. Okay, you're never going to recover from that. That can take, in some cases, years to prove. And in many cases, it never does. What Sanlam say is we'll provide peace of mind by adding a clause to our benefit that says for certain conditions, so there's an exhaustive list, if these happen to you and you are unable to work for longer than the waiting period, which ranges from 1 month to 3 months, they will pay 10% of the lump sum to you. Okay, even if it is temporary and you recover from it. So what that means is it increases the likelihood of a claim. And yeah, we all know that temporary disability is your most likely claim event. So at least in cases like that, the client will receive some payment from their lump sum, but hopefully they still had income protection that paid out during that time. Okay, because 10% in many cases won't replace that loss of income. Okay, special feature number 5, prosthesis booster. So this is only available on elite disability. Prosthetics are apparently very, very expensive. Okay, so I don't know this firsthand, but I think with the cutting edge technology in the space, it's apparently developing at a rapid rate as well. So with AI and robotics and things like this, the prosthetics are apparently unbelievable, but also eye-wateringly expensive. On the elite disability, if you do require a prosthetic as a result of your disability claim, they'll pay out up to an additional 150% to cover the cost of that. Okay, so you can get up to 250% of your benefit paid to you, and that will be dependent on the type of prosthetics that you need. Special feature numbers. Yes, Van.
Sorry, a question. The temporary incapacity, is this an accelerated payment or benefit?
Yes, it will accelerate the disability.
Thank you.
Cool. Boosted payouts. So this is essentially the same as the top-up option that you would get on critical illness. Okay, so it will boost payouts on, typically we're used to the boosted payouts or top-ups on dread disease. Same with elite disability. So on impairment claims, all impairments on a 50% severity will be boosted to a 100% payout. Okay, and then lastly, built-in child cover. So all children between the ages of 1 and 18 will be covered for child-related injuries and impairments, and I think some illnesses. So again, similar to the built-in child severe illness, Sanlam have added this to the disability side of their product. And it will pay 10% of the sum assured, capped at 150,000 Rand. Okay, so some really nice add-ons, some bells and whistles that have been included into this product range. On the disability income side of things, also a very, very comprehensive range of products. So just in terms of how to interpret the slide, So in the middle column, you've got the client type, so professionals and non-professionals. You've then got occupationally uninsurable. So those would be your high risk occupations or people who are unemployed. And then lastly, your medically uninsurable. Okay, and there's been specific products designed and developed for each of those types of clientele. For professionals, the sickness income benefit is a market leader. Okay, it's comparable to PPS's sickness benefit, and I think probably the best income protection in the market. Again, it doesn't have all of these bells and whistles and frills that some other income protection specialists have, which are nice, but do make the product very expensive. It's simple and it's linked to being booked off work by a doctor. That simplicity also ensures the product is very, very affordable. Okay, so Bidvest kind of considered the market leader with income protection. It's a great income protection benefit, but it is expensive when you compare it to the Sanlam sickness benefit. For non-professionals, you've got the temporary income protection. Okay, so this is more of an income disability benefit, a bit more generic and vanilla and comparable with the other income protectors out there in the market. For unemployed or uninsurable, or occupationally uninsurable people, we have impairment income. Okay, so this is just stripped out the occupational disability criteria, leaving you only with the permanent impairment criteria. Okay, so actually a very good benefit. It won't cover temporary claims, only permanent claims. But if you think about it, most of us on this call would have to be quite severely impaired in order to qualify for an income protected claim. We can all work on laptops. I mean, these days, even if you don't have hands, you can talk to your laptop. We consult with people. So, unless our cognitive functions are severely impaired, we can do our jobs. But with an impairment benefit, you lose a hand, you lose a leg, you're disabled in terms of like quadriplegic, paraplegic, the impairment income will pay out on a severity basis. Okay, and then accidental income protection. So Sanlam are the only company that I'm aware of that offer accidental income protection. And this is specifically for medically uninsurable clients. Okay, so again, if you've got a sick client that cannot qualify for cover, please let us take a look at them with Sanlam because we can offer them something. All of these benefits pay for the first 24 months. From month 25 onwards, the extended income protector will pay out for both professionals and non-professionals. Okay, so this is the same across the board. Impairment income will continue, as will accidental income. Okay, so these products, not much differentiation between the temporary and the extended. Reason number 5, I wanted to go into more detail on the sickness benefit. Okay, so we understand from the last slide that it's for professionals only, but it really is a market leading product. Okay, and I'll tell you why. So it's unique to graduates and professionals, 3-year degree or 4-year diploma or higher. A range of waiting period options, so 7-day obviously being the preference, so people can afford it. But the difference comes in where there is no aggregation at claim stage. Okay, so whether you're still earning an active income, whether you're being paid out from your employee benefits, it does not matter. Sanlam will pay the sum assured on your policy if you cannot work. You do not need to provide loss of income, okay? And it is linked to being booked off work by a doctor or a medical professional. Okay, one great example is the female benefit. Okay, so this just highlights the ease of claiming. They will pay out up to 14 days of income for an elective cesarean section. Okay, that is because it's an invasive procedure. It does take several weeks to recover from it. Even though you're on maternity leave, you're not working, it doesn't matter. Your income will be protected and you'll be paid out on sickness benefit. Okay, so the barrier to claiming is very, very low. We've seen it in our claims experience. I have my income protection with this product, and I haven't claimed on it yet, thank goodness. But I definitely am confident that should I need to claim in the future, I'd be taken care of. Temporary income protection. So this is for non-professionals. So this requires an occupational disability to be established. Okay, for shorter claims, it's not an issue because there's a catch-all sick leave event where clients can claim using a doctor's kind of permission for up to 3 months. From there onwards, it would require more of an assessment from an occupational therapist, okay, to determine that you cannot fulfill a substantial and material portion of your occupational duties. If that's the case, there would need to be a loss of income shown and a claim will be paid. Okay, so slightly more difficult to claim on than the sickness benefit is.
Jono, sorry, you have a question from Sean, or you had one?
Cool. Shoot.
Yeah, sorry. I just want to come back to that professional side. And you talk there about specific degrees and things like that.
Yes.
This might be a stupid question, but I need to clarify this in my mind.
Okay.
I've got a degree, and the current work I'm doing, I'm a representative. Can I be sold that product or not?
Yes. Yeah. So you don't need to be working in a professional occupation. You don't need to be a lawyer or a CA or a doctor. If you have a 3-year undergraduate degree, you're considered a professional with Sanlam. There's certain occupations that are excluded, Sean. So if you've got a degree but you're a saturation diver, you're not going to get income protection on a sickness benefit basis. You'll get impairment income, but they will also look at the occupation. Some occupations will be excluded, but you don't need to be performing a professional occupation.
Okay, that makes sense to me.
Cool.
Thanks.
All right. The next unique things, we actually haven't put this in its own category, but it's linked to income benefits with Sanlam. Very few people know this. With Sanlam, on all income benefits, whether it's death income or disability income, if you have an age-rated premium pattern, from the age of 57 onwards, your premium will increase at a decreasing rate. And from age 60 onwards, your premium will convert to a level premium pattern. You'll still benefit from the pricing of an age-rated premium pattern though. Okay, so if you quote on a 60-year-old and you quote age-rated, and then you do another quote and you quote level, the age-rated premium will be cheaper than the level premium, but it will behave in the exact same way. Okay, so what this does is in those years leading up to retirement, and in those years leading up to when that policy or that benefit is going to fall away, your policy will become relatively more affordable, which I think is great. Okay, so if you're doing income protector quotes with Sanlam, check the premium projections, and you will see it behaving in that nature. Obviously makes it a lot more affordable than comparative quotes with competitors. I'm going to pick up the pace a bit. I see I've still got about 20 odd slides to go and we're running out of time. Optional rider benefits on Sanlam's income protection range. Okay, so there's a number of, I guess, add-ons or boxes that you can tick to enhance the benefit. So child protector and spouse protector are available on all the temporary benefits: sickness benefit, temporary income protection, impairment income, and accidental temporary income protection. This will cover your spouse and your child for death and impairment. If this happens, it will pay your income for a period of 6 months. The thinking is you need to take time off work, maybe unpaid leave even, to look after your family. And this benefit does just that. It's not underwritten, okay, but it will be linked to your child or your children and your spouse. Hospital Protector, this is available only on the sickness benefit with a 7 or 14-day waiting period. Essentially, what will happen here is if you're hospitalized for more than 4 consecutive days, it'll match and pay out your income day for day that you're hospitalized. Okay, so example, you're booked off work for 20 days, 10 of those days you're in hospital, you would receive 30 days worth of income from Sanlam. If you didn't have the hospital protector, you'd just receive 20 days of income. And then lastly, the lump sum conversion option. Okay, so Sean, this is the claim stage optionality you were asking about on death, but it's available on income protection with Sanlam on the extended benefit. Okay, so after 24 months, if your disability claim is deemed permanent, you can opt to have your income converted to a lump sum at any stage whilst in claim. And if you pass away before the cease age, any unpaid income will be present valued and paid to your estate. So you'll never lose out on any of that benefit.
Jonathan, a question there that I've been thinking about.
Yeah.
That it pays into the estate. Can I
Yes.
rather have it as an option that it doesn't pay into my estate and it carries on as a monthly payment to the beneficiary? Or must it go to the estate?
No, it will have to go to the estate.
Okay,
Because
makes sense.
you can't nominate a beneficiary on disability benefits.
Okay, 100%.
Yeah, on the death income you can. So if the beneficiary on death income dies, then it can pay to the estate as a lump sum or be passed on to another beneficiary, I think.
Okay.
But on income, no.
Just a note to all the other guys. Sorry for all of these questions, guys. I've been out of this industry way too long. There's a lot of stuff that I need to catch up on.
No, your questions are good, Sean. Keep them coming. Okay, reason number 6, severe illness benefits. So I think severe illness is one of those areas. It's a bit of a minefield. How do you compare severe illness benefits? Whose is the best? The answer is from ICON, we don't know. We can't say that anyone is the best, but I think there are quite distinct differences, pros and cons between the various products out there. What Sanlam does do quite well is give you choice. And they've split their disability offering into 4 products. So you've got the comprehensive severe illness benefit with Sanlam. That's the gold standard. It covers over 300 specified illnesses. And you've got the plus range, which is your top up, and your impact range, which is your severity-based benefit. Okay. But what's really nice is you have these standalones as well, which cover cancer and cardiovascular definitions exclusively. Okay, so you've got a client. Yeah, Sean.
I've heard the other day, and I don't know if I misunderstand this or that, on the severe illness, there are certain products that if I have got a cover with them and one of my children falls in that criteria,
Yeah.
a part of the payment is accelerated for that. Does Sanlam provide that at this stage or not?
Sanlam does not include that as a built-in benefit. So they do have a standalone child severe illness benefit that would need to be added to the policy.
Okay. The others are the same. I just wanted to clarify if that is with Sanlam as well. Okay. Thanks a lot.
Perfect. Cool. So yeah, what you can do with these, if you've got a client that's particularly concerned about cancer, cancer is probably the scariest dread disease. It's the most common. You can take out comprehensive severe illness and then bolster it or enhance it or top it up with some additional cancer benefit. If you're diagnosed with cancer, you'd be paid out under both. If you have a heart attack, you'd just be paid out under the comprehensive severe illness benefit. Okay, so you can tailor make a solution based on what your client's needs and wants are. There's some nice catch-all benefits built in. So my favorite is the cancer catch-all. There's a catch-all carcinoma in situ. Okay, so what that means is any stage 0 cancer is covered. A lot of companies have a specified list of early stage cancers. Some companies don't cover stage 0 cancer at all. They'll only pay out from stage 1. Terminal illness. Okay, so if you're diagnosed with a terminal illness, regardless of what the cause is, your severe illness will pay out. And then lastly, a general catch-all, which again, like the disability, is linked to whole person impairment. Okay, so if you're impaired, you'll qualify for a claim under both. Well, if you're impaired up to 35%, you'll be covered under both your severe illness and your disability benefit. Sean, this is the child illness and injury product that I mentioned. Okay, so a lot of companies have this built in to the comprehensive cover. The problem with that is there is an inherent cost to that benefit, and not everyone has children. So, I mean, I don't have children. If I buy severe illness and there's that benefit built into it, I'm indirectly cross-subsidizing, or I'm directly cross-subsidizing everyone that does have children. So Sanlam made the decision with the severe illness, because it is a very expensive benefit, to actually remove that and offer it as a standalone. Okay, and it covers 80 child-specific claim events, ranging from illnesses to impairments to accidental things like children eat stuff and put things in their mouth. So it covers things like poisoning, up to a max of R1 million. Okay, and then I've mentioned the comprehensive severe illness, the standalone cancer, and the standalone cardiovascular. Sanlam also offers a core dread disease. And everyone used to offer these back in the day. They've kind of been done away with. And I think it's just because no one like sells them or markets them. But I believe that these products have a place in financial planning. And I believe that because if you look at what's covered and if you look at what they cost, they offer exceptional value for money. So what does the core dread disease cover? Very simply, cancer, heart attack, strokes, and coronary artery bypass grafts. In other words, SCIDEP. Okay, so all of the most common illnesses are covered through the core product, and they're covered at a very, very good price. So if we just look at some pricing, I've done an example here of a 40-year-old male, R1 million cover. The comprehensive option costs 869 Rand. Okay, that's going to cover pretty much your entire spectrum of illnesses. Your core product will cover 70 to 80% of claims, but it costs about 60% of the price. And you don't need to go for one or the other. You can have both on your policy. Okay, so I think the smart thing to do is actually to split your benefits across the two product options. Okay, you can get more cover for your most likely claims at the same price. Just food for thought. And then the pricing of the cancer and the cardiovascular. So obviously in men, cardiovascular claims are slightly more prominent than in women. So in this case, the cardio is more expensive. If we'd done the pricing on a female, it would be the other way around. There are also very cool like underwriting opportunities here. So I don't know if anyone works with or has come across diabetic clients. If so, and you applied for critical illness cover, I will be very surprised if you were successful. Don't think we've ever had a diabetic successfully qualify for severe illness cover. But what you can do with Sanlam is you can offer those individuals cancer cover. it's still going to cover them for 50 to 60% of their potential claims. And yeah, there won't be any loadings or exclusions because diabetes does not increase your likelihood of cancer. So again, you can offer a solution to that client that you wouldn't be able to get elsewhere. Okay, I'm going to skip through this one quite quickly. So in terms of marketing content and tools, Sanlam has a lot of stuff. So please speak to us. Campaigns, social media content, digital marketing support. They've got a whole bunch of really nice practice management tools, business needs analysis. They've just launched something really amazing called Money Personalities. So we're going to do a webinar on that sometime in the next month or so. Money Personalities is an AI-driven tool, or it's a questionnaire or chatbot that actually helps you understand each of your clients' relationships with money. So we can do an FNA to understand what their needs are, but this tool actually digs deeper and helps you understand the psyche of your clients. You know, how do they relate to money? How do they think about money? And I think that's very, very helpful for advisors because our roles are changing. It's not just about doing an FNA and, you know, like providing a solution. We actually have to manage people's behavior. And I think it's going to move in that direction more and more as the industry evolves. So very, very cool tool there. And with Icon as well, we're releasing tools and content all the time. So I'm not sure if any of you guys have seen our matchmaker campaign or any of our content on social media. If not, please do follow us on LinkedIn. We're posting regularly, and I think a lot of the content is relevant to you guys as well. All the Sanlam stuff can be found on Sandport under forms and downloads under the marketing and campaigns section. Okay, so you can go and explore and play around there. A host of content. Obviously, Sanlam has a very large marketing department, so make use of their content. And then Money Personalities. So if you do want to access it, you can screen grab this and just save it somewhere and scan the QR code. Okay, play around with it. It's a really cool tool. I learned some stuff about myself personally by taking it, and who knows, it might be something that you'll implement into your advice process. Okay, reason number 8, a proven history and a reputable brand. So Sanlam, this is just a bit of a brag. For the last 3 years running, they've won the FIA Long-Term Insurer of the Year Award. So 2022, 2023, and 2024. I don't think the awards have been held this year yet. I might be wrong. But let's see if they can take it a 4th year in a row. I don't know exactly what goes into this award. But yeah, Sanlam definitely a trusted and reputable brand. And I think that takes us to the next point, which, I mean, I'm analytical and data driven, and this holds a lot more weight, is the Ombud stats. So this is something that we look at quite closely on an annual basis. If you go onto the Ombudsman website, you can download all the Ombudsman stats across all the different FSPs in South Africa. It's actually very, very interesting, especially when you start comparing it over years and picking up trends. But one thing that we look at quite closely is the number of complaints filed and the percentage of those complaints that are ruled in favor of the complainant. So essentially, it's telling us how well are claims being handled and processed and approved. You know, are clients being treated fairly? If claims are valid, are they being paid? Or are they making clients jump through hoops? Are they incorrectly declining claims and then clients are going to the Ombudsman and those decisions are being overruled? Okay, and Sanlam consistently come in well below the market average in terms of complaints resolved in favor of the complainant. So we can see BrightRock and PPS and Momentum and Liberty all kind of 30 to 32%, maybe 33% of claims that were complaints heard by the Ombudsman were actually ruled in favor of the complainant. Interestingly, Old Mutual coming in well below the market average. That's surprising to me, but go Old Mutual. I think Discovery, I like Discovery, but I hear a lot of bad things. So, but Sanlam, I mean, Sanlam are doing things right. And we've seen this, we can echo the sentiment in terms of the claims that we've helped process for our advisors.
Jonathan,
Yeah, Sean?
as a statsman myself, and
Yes.
looking at this thing, there's one thing that's worrying me.
2023.
Sanlam is the only one consisting that's growing. If you understand what I'm meaning there.
Yeah, no, fair enough. So I'm not sure what happened in 2023. But yeah, I agree with you there. That's not great. But it's
That's not a
still
slide I will use with a client at this stage. But we are the
cool.
lowest, definitely.
Fair enough. Yeah. We're still, I mean, in 2023, yeah, I mean, Discovery's slightly lower, but still amongst the best. Be interesting to see 2024.
Yeah.
I'll actually check if 2024 is out. And I'll update you to see if the trend has continued or if they managed to pull their socks up.
Thanks. That was just a bad thing, but yeah.
Cool. No, well spotted. Okay, so Sanlam consistently has the lowest percentage of cases resolved against them. 2021, it was only 13%. The industry average was 31%. If we go prior to that, it was 14.7% over a period of 7 years. And then 2023 maintained a low 22%. So it did increase, but still lower than the likes of Liberty and Old Mutual. And then I know we're slightly over time, but just very quickly wanted to touch on the shared value component that Sanlam offers. Okay, so insurance is always a grudge purchase. We're all well aware of that. I think, Sanlam are obviously trying to improve their mean average term. So what that means is the average term that a policy remains on the books. In order to do so, they've incorporated and introduced things like the wealth bonus. And this is built into all Premier policies for no additional fee. And what it does is it is an incentive and essentially a rebate on some of the premiums that you've been paying over your policy lifetime. There's other loyalty benefits built in, like the cashback benefit. Okay, so cashback, you pay an extra 35% of your premium. You get all your premiums back after 15 years. Makes a lot of sense if you keep your policy for 15 years. Does not make any sense at all if you cancel or lapse your policy before then. There's large cover discounts. Okay, those are built into the quotes. And then reality, which is Sanlam's version of Vitality or Multiply, where Gold reality members get up to 30% discount on their risk premiums. So some really nice things to consider. I'm not going to go into the nuts and bolts of cashback and large cover discounts, reality, and the Sanlam Protector Umbrella Trust. But I do just want to unpack the wealth bonus slightly. Okay, and again, hopefully it will leave you asking a few more questions, which we can cover. But the wealth bonus is really based on the risk premium that your client pays. Every time they pay a premium, a percentage of that premium will be allocated to their wealth bonus account. This graph will show you the percentage of those premiums. Okay, so from the age of 18 to 32, 100% of your premium will be allocated to the wealth bonus. Then it ratchets down to age 61, and from age 61 onwards, 25% is allocated. Okay, it's a notional portfolio, so it's not an investment. You aren't entitled to all that money. 5% will unlock every 5 years. Okay, so whatever's banked in there, 5% will vest, with the full wealth bonus unlocking at age 75. You can add something called the early access option, which will move the unlocking date forward by 5 years. And for that, you pay a premium of 2 to 5%, depending on your age. Okay, these wealth bonus amounts rack up to quite a substantial amount of money. Obviously, you need to keep your policy active and in force, but claims do not negatively affect your wealth bonus. Any reduction in your premium of more than 20% will result in a proportionate reduction in your wealth bonus. Okay, so if you are reducing benefits and as a result of that, your premium reduces, then there can be negative impacts on whatever's in your wealth bonus account. I just want to focus on this slide. So this is an example, a 35-year-old with a fixed 5% premium pattern, level cover. Okay, it doesn't really matter what the benefits are. Their premium is 1,139 Rand per month. Okay, at the age of 70, they'll receive just under 1.1 million Rand from their wealth bonus. If they introduce cash back, you'll see their premium increases by 35%. Their wealth bonus at age 70 will be 2.3 million Rand. Okay, and with the early access options, the green, and this is unlocking 5 years earlier, the premium is about 50 Rand more. The wealth bonus will be 814,000 Rand at the age of 65, and with the cashback, 1.8 million. Okay, so if clients are going to be paying risk premiums to the age of 65 or 70, and assuming the benefits and the premiums are relative, between Sanlam and the competitor, this becomes a meaningful value proposition. I wouldn't necessarily say sell it purely based on the wealth bonus, but all things equal, I do think it's a nice differentiator. Okay, there's extended wealth bonus. And essentially this allows people to defer the wealth bonus unlocking date to a later point if they want to. I don't really see value in this. I don't know who's paying premiums on risk at the age of 75 or 80. I personally wouldn't recommend it unless you're a very wealthy person, but this is available. Yeah, and essentially it will unlock in tranches from the age of 75 onwards. There's also something called the Wealth Bonus Booster, which wasn't mentioned, and this is if you have a risk benefit and an investment benefit with Sanlam, you'll qualify for enhanced boosters on your wealth bonus or enhanced allocations. So that is my story for today, everyone. I'm sorry for running over time. I hope that you learned a couple of things about Sanlam. We'll be sending out the presentation. If you do have any questions, please feel free to drop me a mail or give me a call, and we can unpack anything you need in more detail. Please do also go to our YouTube page. We've got so much cool content on YouTube, and I don't think it's really utilized very often. It's called the Icon Learning Hub on YouTube. All of our webinars, a lot of the stuff we put together is there. So yeah, if you're learning, especially Sean, you're wanting to learn a thing or two and brush up on product, that's a very nice resource for you.
I'm coming to you on that. When I got the email, I couldn't find your hub on YouTube. I don't know. So when you contact me later, please
I'll send
me the link, but you have to call me. We have to talk.
Okay.
Thanks,
Perfect. Awesome. Thank you, Sean. Thank you, everyone. Appreciate your time, and look out for the next session, which will be